Hey, welcome back to the Money Ministry. I'm your host, Craig Mack. We're going to continue our series on technical analysis. We've already covered the candlesticks, and so we're going to continue to build on the previous sessions. If you're new to the channel, welcome. Thank you for clicking on the thumbnail. And I would highly recommend that you go back through the playlist and study or look at the playlist to see the other episodes that we've had. And that way, the content that I cover in this one should make more sense to you. Um, and if you've already been with me throughout this journey, then we're going to continue to build on what we did on the previous session. Okay. So with that, we're going to cover the exponential moving averages. But for those of you that are new, again, my name is Craig Mack, and I've been studying the stock market for, excuse me, a number of years now. And I always start out these videos with trying to establish my credibility with you if you've never seen any of my content before. And so what I'm going to do is I'm going to share with you the performance of uh, of my portfolio thus far. Um, let's see here. There we go. Okay. So this is year to date. I am at 5.88% since the beginning of January through March 19th. I am still doing better than both the S&P and the NASDAQ combined. Um, Recent events have caused me to lose a little bit of money. I've only made $1,000 since January with the events of the war and whatnot. I don't show my portfolio because the intent of this content is to show you how to select your own stocks and to build your own portfolio and not to just simply copy mine. I am not a financial advisor. I'm not going to recommend stocks to you. I'm not licensed to do that. And so, therefore, I'd rather, as the saying goes, if you feed a man, he'll eat for a day. But if you teach a man how to fish, he'll eat for a lifetime. And so I'm trying to teach you how to fish for your own stocks and to put together your own portfolio. I also try to be as transparent as I can. I track my losses and gains for the month. And so far this month, I am down a total of 1700, 1786.45 to be exact. I have a daily loss of about $119. So that's where I stand as of March 20th. And so from there, we'll get into, excuse me, as I get things set up here, we'll get into the moving averages, exponential moving averages. Okay, understanding the three-line exponential moving averages, you have a 20-day, 50-day, and a 200-day. Okay, and it basically tracks the price action over those time frames. All right, what is an exponential moving average? It's a type of moving average that gives more weight to recent prices. So it gives you three layers, 20, 50, and 200-day. Captures current momentum and emerging trends. And it's weighted pricing. So it's much more accurate, layered um, measure than just a simple moving average. Okay? All right. Now, do this content in decks like this so that you can stop the video, take notes, screenshots, and learn it at your own pace. So I just kind of summarized the slides, but you can also, go back and stop it, like I said, and take your notes to learn however you're comfortable learning. That's what this is set up for you to do, so you can learn at your own pace. Okay, the 20-day moving average, short term. Your 50-day is the intermediate, and your 200-day is your long term, which is more of if you're a long-term investor, which I recommend that you be a long-term investor, you pay more attention to the 200-day than the 50 and the 20-day. However, you do consider those others to get a reading on which way the market is going. If the 200-day is still upward sloping, then you know any dips in the 20-day is a short term. Same thing with the 50-day. If both the 50 and the 20 are downward sloping, but the 200 is still upward sloping, still not no reason for you to be concerned if you're a long-term investor. But when all three of them are turning downward, like they are now, then you that's when you might want to make some changes. Depending on what you want to do, as you get more experience as an investor, you'll find that these are actually buying opportunities when the lines start to collapse on each other. That these are actually buying opportunities, especially when they go below the 200 and start coming back up to cross it. And we'll go into that later on in this presentation. But that is the buying opportunity. Okay. All right. For those of you that are into math, I put this formula out here to show you how the averages are calculated. I won't go into that. I'll let you guys do that on your own time. All right. Why use the three exponential moving averages together? Well, it's a layer of perspective, noise reductions. It reduces the noise so that when there is a blip, like in the 20 days starts going down, you don't necessarily have to react to that. Okay. It's only when it starts impacting the 50 and the 200-day that you should start, perking up a little bit and paying more attention. All right. It's a signal generation. Okay. Crossovers, and we'll go over the definition of those, but the crossovers are signals whether to buy or sell. Okay. Key trading signals for the three-line moving average setup. A bullish signal. If the 20-day crosses above the 50, remember I said we were going to go over the crosses. Crosses above the 50 and both remain above the 200. That is a strong upward trend. Golden cross. 50-day crosses above the 200. This is after everything, the 20 and the 50 have fallen below. It's widely watched signal for potential bull market entry. Okay. Bearish signals, 20-day crosses below the 50 and both drop below the 200, which is about what we're going through right now. That is a bearish signal. And then the death cross, 50 crosses below the 200 and signals potential downward trend. Let's see if I can pull that up here. Let's go to the S&P. Should have a good example of that right about now. Yeah. As you can see, this red line here, that is your 20-day, and this gold line is your 50-day. The green line is your 200-day. As you can see, the 20-day has already crossed the gold line, your 50-day, which is a bearish signal, and they're both are pointing downward. Now, the 200-day, the green line, has not quite turned downward yet, but it is flattening out. Okay. And this red line here, that's what I've have as a resistance level. I mean, a floor. Okay. This is where I think it's going. And you see today it crossed that. So it's like a falling knife right now. I'm waiting for these lines to start turning upward before I do anything as far as buying. Okay. But I think we're in for some more downward pressure. These two lines here, these are my channel lines to show where the range of the downward pressure is going. I think it'll probably look better if I did them as lines there. Okay, as you can see, it's been following this pattern, and now it's accelerated, and so yeah, we're in for some more downward action here. Okay, all right, let's get back to the presentation. All right, so those are the crosses, and those are your bearish and bullish signals. Death cross, golden cross. All right, practical uses. Again, you can identify trends. You can look for entry and exit points. which is why I did that, those channel lines and the floor lines to try to get an idea. Dynamic support and resistance, which again, we've talked about that. Risk management, for those of you that utilize stop loss orders, it gives you an idea where you might want to place your stop loss order based on what the lines are showing you. Limitations and best practices. Keep in mind, this is a backward looking. It doesn't predict where things are going. It only shows you the trend and where it could possibly be going. Okay, by using the lines, you can avoid generate false signals in sideways or range. So you have to be careful, looking at what the market is doing as far as price action. But um, you can avoid choppy markets. Use the 200 day as a filter. That's your anchor. Pay more attention for the long-term investors out there. Pay more attention to the 200-day moving average to help reduce any false signals. It's pretty accurate because again, it shows the price action over a 200-day time frame. So therefore, you have a lot more data points to add credibility to what you're seeing. Okay. It adapts to volatility. Excuse me. Doing a little cold right now. Okay. Three lines. So just to summarize what they are. This is the 20-day, 50-day, and a 200-day average of the market's price action. Okay. For swing traders, it typically produces when you use these in conjunction with your other indicators. Do not just rely on your exponential moving averages. Combine that with your other indicators, your candlesticks, and I'll go over some of the other indicators, your relative strength indicator, your accumulation and distribution lines, as well as your MACD. You use all of your indicators, all of your tools to put together the puzzle of where you think the market is going and where your next move might take place. Okay, and use the 200-day as your anchor. Okay, so right now I know it's pretty rough out there, but quite honestly, that is why I also use faith as part of this content. You have to have faith in what you're doing. You have to have faith that things are going to turn around. You rely on your spirituality and know that no matter what is going on with the presidency, that God is still on the throne and is in control. Now, what's going on with the president? Well, this is what happens when you put a narcissist, cult leader, felon in charge of the country that is in the last days, in the twilight of his life. He is not going to make rational decisions because he knows that he is dying soon, and he doesn't care what damage he does because he's not going to be around to deal with the ramifications, and everybody doesn't focus on that. They don't talk about that. But that is really what's going on with this man. He doesn't care because he knows he's not going to be around to deal with the consequences of it. So he is going to do as much damage as he can before he leaves, not just the presidency, but this planet. So the more people talk about him and ridicule him, you're fanning the flames with this man. And that's what he's going to do. He's going to get worse. So with that, I'll leave you with that. And I will see you on the next one.